Okay, let's have a look at the DXY. So let's have a look at the US dollar index first. Well, yesterday I posted a video. Um, it was a warning saying that I think this is a bull trap. Okay, and then I also think that the DXY could potentially be starting a new phase in its bull run. Um, so let's dig a little deeper here. We'll start on the 4 hour. So, smart money indicator. I did say yesterday that it only had up to about 0.5% move down before it started finding support. Well, um, this happened shortly afterwards at around lunchtime, UK time, and since then we've been making quite an aggressive move back up. So it's nearly a 1% move. And we've also got this chock, which is change of character on the 4 hour. So a change of character means that it's a change in the direction of price. Okay, so we've got a bit of a fake out here with a BOS, and a BOS is a break of structure. Okay, so when you get a close below a previous low, it's a break of structure. When you get a break above a previous high, it's a change of character. So we've had both of these. So we've had a bit of a fake out to the downside, but smart money has clearly bought this. With you can see this block here, this blue block, and then we've got a change of character to the upside. Sorry. So let's zoom in. We'll go on the daily. Now, on the daily, it's had this. It's within this falling wedge type structure, okay. But I don't really pay too much attention to that pattern. All right, I'm not going to put all of my thoughts into this just looking like a falling wedge. Even though when we move out, you've got this flag type structure, okay. And you'll also see that quite a lot on Twitter with Bitcoin on the 1 hour time frame and stuff like that. All of these morons with ridiculous amounts of followers telling you that Bitcoin is going to break out, blah blah blah. Well, with the US dollar index, this is what it looks like on a larger time frame. Okay, so since December 20, we've had this parabolic curve. So this parabola, this was broken to the downside. But look at this consolidation. This consolidation is within a falling wedge, flag type structure, whatever you want to call it, which is bullish. This is a bullish setup. Okay. Now, if we break out, let's say here, this is a good chance that this whole structure is a bullish setup for continuation to the upside for the US dollar index. Now, on the daily, I did mention that we've got a strong low in place here. Okay, so on the smart money indicator, this is telling us that there's a huge demand for the US dollar at these prices. If we flip onto the weekly, this could potentially be a 1-2. So if let's get a fib on here. Yeah, so it's come down to the 50% range, which is good enough for a wave 2. Usually you would see it come down to the 0.618 or even lower. But if it's super bullish, then the 50% range is fine. Okay, it's absolutely acceptable, and you can see that it has come down to that range. And yeah, that's consistent with a wave 2. So if we have a look, if we get our wave count up, this could be a wave 1. We could already have wave 2 in place, and then we're looking for a wave 3. So how would we measure a wave 3? Well, we'll go from the start of the cycle, and we'll go down to the bottom of wave 2, where we think wave 2 is. Okay, that could potentially be impulsive. So this whole area here would be a wave 3. And you might be thinking that's a vast area. Well, it is. So a wave 3 could only come to this box here. And I wouldn't necessarily mean that it was an ABC correction. It just means that it's not as impulsive as most wave 3s would be expected to be. And then you would expect a smaller wave 5, but it would certainly be smaller. The fifth wave would be smaller than the third wave, okay, because the third wave cannot be the smallest. But wave 1 can be the biggest. So, yeah, my thoughts are likely that the US dollar index is going to come up quite a lot higher, possibly even past the 1.618. Now, if you think about economics right now, there's good reason for that. So money is expensive to borrow. People are struggling to pay their mortgages. They're struggling to keep food on the table. They're struggling with electric, all sorts of things, okay? So cash is potentially king already. And that's good reason for the USD to start pumping, okay? Everybody wants it. So this is not good for crypto. It's certainly not good for risk assets, and it's definitely not good for the housing market, most markets in general. It means that people are going to want the US dollar. It means that they're going to want to get rid of their assets. It's going to mean that they're going to do whatever they can to get hold of it, okay? And any other currency. But the US dollar would generally be more desirable. So that's me. I won't bore you anymore with that. But that's just me keeping it simple, okay? Going over to XRP, well, I don't need to tell you any more about what I see for XRP. Keeping it simple, look, I mean, massive bear flag. I won't bore you anymore with that. Same with Ethereum. Same with Bitcoin, just on a bigger scale. There's your bear flag here. Something like that. What I also want to show you is the CoinLights chart. Okay, so this white line here, we'll make it a bit bigger. This is spot, okay, and the blue line is derivatives. So this is the 4-hour chart. Now notice how spot is below derivatives here. This is not good, okay. It means that spots are not they're not outperforming derivatives. So this is a derivative driven rally. If we go on to the 1 hour, you can see it even more clearly. So spot is still not interested in this rally, whereas derivatives are driving the price up. Okay, that's not bullish. What this could be is just a massive bull trap. Okay, it's to trap longs to gain liquidity before they dump the price. There's your telltale sign. If we go further back in time, and now we go back onto the 4-hour, look how when we had this rally, look how when spot was participating in this. So spot was buying the dip, buying the dip, buying the dip. The price was going up, and spot was above this blue line, which is derivatives. Okay, the whole time. But we don't have that anymore. Okay, this is bearish. Yeah, I mean, I think that's all I needed to to discuss, really. I think this is going to catch a lot of people off guard. I don't know what the narrative is going to be, but a wave 3 is going to be very aggressive. It's going to be very fast. So this one took from December 20 to September 22. I mean, this one could go like this. By April next year, or even quicker, we could be up here. That would also give enough time for Bitcoin to dump 21, 22, yeah. So, yeah, pretty much perfect. About February, April time. It all fits, guys. I mean, in terms of time proportion and whatnot. We could do a time-based fib. So if we go, yeah, about October time, fits well. June 24. Might get a bit of a bounce for Bitcoin and crypto in this wave 4, and then up again. And then what happens after that? Get an ABC. This would probably be your alt season Bitcoin going back up again. And then more often than not, you get another 5-wave count. So it could be going up again. That's for another date. But this is what I wanted to show you guys. I hope you enjoyed it. Thanks.